in order to get to pre-pandemic levels, we would have to fall 35%. Do you think?
Yeah, I do.
Whoa.
Two things. So,
No, not happening.
Yeah, it's happening. I think that it's going to continue to go down. In the simple reason being, you have your interest rates on everything that you've bought are now going to cost more. It's going to be more difficult to get them. And then the last item being is unemployment. The drops that we've seen right now aren't actual. I don't think what we've seen right now is sentiment.
Here's why you're wrong.
When I was broke, I had rich habits. When I was broke, I had
Let's dive into it. Welcome back to the Master Keys Podcast, Season 2, Episode I Don't Know. I'm Neal and Andreino.
I'm Chandler Haliburton.
And we're real estate investors and real estate agents. Together, we have around 200 units. We have some commercial assets. As real estate agents, we have a realtor group. We sold, $400 or $500 million in real estate. We've done a little bit when it comes to real estate world. Nothing crazy. I mean, there's people out there that do more in a year than we've done in our whole freaking career. But we talk about on this podcast our experiences, what we think. We're not financial advisors, but we try and give some insight on real estate investing, what's going on in the market, what's taking place across Canada, a little bit in the States, and just an overall picture so you can get an idea of what you should be doing or what you think you should be doing based on that.
And we've gotten to the point now where we are the #1 real estate investing podcast for Atlantic Canada, and Atlantic Canada is booming. So thanks for checking in on us. If you're local to the Atlantic Canadian region, you know what it's all about. Things have been great here. We're really fortunate. So we approach everything from a real estate wealth growth lens from what we do in our background. We're going to talk about the state of the market, because as much as it was going awesome for a while, the new home price index numbers have come out and things are trending in the opposite direction, as we know. But I'm going to actually break it down really specific item by item, and then I'm going to put Neal on the hot seat kind of for the second half of this episode. We're going to find out what makes this guy tick. We're going to ask him a few questions and get to the meat of some things, because you know what, people ask me all the time, like, what's that Neal guy like? What's that Neal guy like?
Same question.
I'm
completely unprepared here, by the way. Like, I have done no research here. Chandler's going to ram some stats.
No, these are going to be easy
news,
questions. They're going to be,
and then he's going to hit me with some questions to completely and totally expose me on the internet.
They're going to be from the heart. Listen, we've been doing this now for a little while, and it's been really well received, so we're going to do it again.
Yep.
$100. If we get 150 likes on this video, one of you that likes is going to get $100 sent directly to you, and you get a bonus entry if you comment down below. Would love to hear a comment that's related to something you heard in the video, and
free Patreon.
Free month to our Patreon. Right now, what we've got on the Patreon is how I got into a property with zero down, how vendor takebacks work, how private money works, a breakdown of a $35,000 per unit renovation. What else do we have on there? There's tons of stuff. Y'all are sleeping on the Patreon in a major way. We're trying to give you this $1 million worth of advice for $15 a month. No, it's crazy. You seriously should check the Patreon. See if you're interested in the headings. One of you will get it for free, though. Just like and make a comment. We looked at the analytics, and it's crazy how, for the number of views we get, so many of our views are people that haven't subscribed yet. So subscribe. Just check it out.
Thanks for checking us out, guys. We're going to jump right into this now.
Yeah, so let's start with what's going on in the market. So the home price index is kind of like the consumer price index, in that it takes, I think it's 31 major centers across Canada, bundles a number of properties, and tracks what is going on for property values across the country. It is a lagging indicator. We've talked about lagging indicators before. With real estate, it's especially true because a deal gets done on day one and it may not close for 90 days, and people have rate holds that then expire. So all of these things give an indicator, albeit a lagging indicator, of what's going on in our market. So I'm going to go through these headings, and Neal, just jump in when you find something that gets you going. So for 6 months in a row now, inventory has been declining. That's the number of homes available for sale. We're down almost 20% from this time last year. So that means sellers are not selling their home. This actually helps prop up the market because sellers know. Yeah, I mean, sellers know that buyers aren't confident. If buyers aren't confident, sellers aren't going to put their home in the market. They know they're not going to get as much, and maybe they don't have anywhere to go. So we're down almost 20% from this time last year.
I think that's going to change.
You think people are going to feel the pinch soon and start to unload?
I think so. I think there's also this idea of, like, when people are doing stuff, people tend to follow. There's like a weird thing of, like, well, if they're selling, even though things are down, I think it's probably because there's more fall to come, and there's potentially on the back end I'll be able to get in at a better price. Like, if it's falling, I'll sell now, and then I'll hopefully buy in further down the line. I feel like it's the same for people who are buying. Like, they kept buying, and the people kind of saw the writing on the wall, but it's like, well, he just bought, so I got to buy.
Yeah, or I'm hearing it's a bad time to list, so I'm not going to list.
Yeah.
But then necessity might change that.
Yeah.
In the Greater Toronto Area, which is kind of the biggest market in Canada, it was the lowest inventory in August for 20 years. Again, not surprising, except when you think of how
insane.
much the city has grown in 20 years, and there are still less homes for sale now in this August than there were in Toronto 20 years ago.
This is proof that just like interest rates don't. It's not just an interest rate thing. Even though again, I think it's going to come in about 6 months from now that we're going to see people who necessity sell. But it's interest rates don't just force people to list houses or leave a bunch of houses on market. We've talked about it 1,000,000 times that the inventory is the issue, and the only way this is going to go up is by building more houses. You just physically need more homes. So, but I'm surprised how pronounced it is that it's 20 years that they haven't had slow, because I feel like Toronto's had like crazy boom years where like
Oh my gosh. And you'd think like even just bringing on a couple projects online that release, I don't know, a few hundred condos into the market, that would be
Yeah.
enough alone to offset that. But no, the lowest inventory in 20 years. And it's like the third lowest inventory in 20 years in Vancouver. But the question is, what is this doing to pricing? To your point, what we are just talking about, sellers are not yet feeling the pinch. They're not unloading properties yet. That's why the volume is shrinking. But the house price index dropped 2.1% for the month of August, which is the biggest 1 month drop in the history of the index. So that means you take all of this average. This is kind of like almost like an inflation measure for housing, if housing was treated like a good, and it dropped 2.1% across the country.
what does that index measure exactly?
So it measures the average home price, seasonally
Okay.
adjusted average home price across these 31 major centers.
Did you happen to get that number?
What's that?
Did you happen to get that number? What the price is now?
Oh, I think it's in, I want to say,
7.
no, it's lower than that. I don't have it offhand, no.
Okay.
And
It peaked
realize,
out over 8. It was
Yeah.
8:30 at the start of the year.
but also realize that it weights them all kind of equally because it takes the 31 cities and weights them together, right?
Oh.
So it's not going to be as skewed by, say, things that take the total number of sales, like
Or
where
like
Toronto
there's a
skews things.
bazillion in Toronto.
So it really does measure the thing that's going on, and that's the biggest drop.
One thing I want to point out too about this inventory that might also skew data a little bit is like the idea. So in Toronto, I know I saw it somewhere that there was the amount of cranes in the sky had gone down and the number of projects being proposed had gone down. And it's simply a matter of like they're running out of necessarily sites to do. And
Right.
the price
Yeah.
of those sites has gotten so high that the actual project numbers within Toronto have gone down. But then the surrounding towns or cities are actually still having quite a bit of growth, right? And like that's what we've talked about before is the auxiliary areas that are outside of the main city have these big growth nodes. It was the same in Vancouver. Like downtown Vancouver, there were very few cranes, but then Burnaby, whichever it was, like it's an hour away, Burnaby had cranes galore
Yeah.
and buildings just shooting through the sky.
Yeah.
And so I feel like that might change a little bit the stats. It might move the stats a little bit on the
Totally,
inventory
and
side.
that's why I wanted to go through these stats and really break them down, because there's some kind of contrary and some sort of interpretation stuff that needs to be done when you think of even just how turbulent this 1 year has been.
Yeah.
So this measure takes 31 cities, and for the month of August, every single of those 31 cities declined in their pricing, except for 3 cities, all in the same province. Neil,
Oh.
name those cities, name that province.
God. Wow. Please, let me think here. So 31, 3 cities. Do we have?
They're all in the same province.
Is the province of Nova Scotia?
It is not.
Moncton, Fredericton.
No, it's Alberta.
I was going to go with Alberta because I was like, oil boom's going nuts and they're doing great out there. No way.
Calgary, Edmonton, and Lethbridge actually all saw
Lethbridge.
moderate increases in their home price index for the month of August. Every other city in Canada declined. So if you're listening from Alberta, give it a little shout. Let us know that you're there. And you should take some comfort that while the rest of the country is seeing a pullback in pricing, those 3 cities were the only 3 major cities in Canada included in this measure that saw an increase in pricing.
That doesn't surprise me though, because you know what? They were actually reasonably affordable in the sense that their house price average wasn't that high. Their average income was high. Their overall taxes are low. And now there's a boom in the oil sector. So like I feel like they are poised to have good growth right now and kind of be able to weather the storm, assuming that oil can stay propped up.
Yeah.
I mean, it's pulled back a bit, but hopefully it can stay over a profitable level.
Also, a lot of Alberta has had some really, really weird ebbs and flows that I saw something where, like, over the last 15 years, they're really only up about 30%.
That's what I mean. Like
Right.
they haven't had a lot of like that's why their pricing's still so reasonable.
But they also had some pullbacks. And if you think, well, 30% over 15 years, man, that's 2% a year. That is very sustainable.
Yeah.
It's less than inflation. It's less than income growth. So, I guess shout out to Alberta. They're
Moving everything to
they're in
Alberta.
good position maybe to weather the tide here. So an interesting thing that they also measured was how far cities have come from their reported peak. And what they did is they took the national peak, which they measure as May. Now, you and I may disagree with this. When do you think the absolute peak was? Anecdotally.
April.
Yeah.
Start of April sort of thing, mid-April.
I sort of felt like the transactional peak was March and April, but those deals close May, June, July. That's why there is this
True.
pricing lag. So they say that the actual home price index across Canada peaked in May, and since then it's down 4%, but it had a really significant kind of range here. So Hamilton down 10.5% from that peak,
Okay.
which is not insignificant.
No.
Halifax, near and dear to our hearts, down 8.7%
Yeah, that sounds
since
about
the
right.
peak.
Yeah.
Toronto down 8.3%.
Really? That's it?
Yeah.
I guess
Now,
again,
again-
the same thing. The downtown core just tightened up. Nobody decided to sell. There hasn't been much panic selling.
But listen to these areas as well. Abbotsford, Mission area down 15%. Brantford down 13.6%. Ottawa, Peterborough, and Windsor areas kind of 12 to 13% from the peaks in May.
Interesting.
Yeah, those are some pretty big numbers. And HRM I saw actually just from July to August, we dropped 3.8%.
That's not as bad though as I think everyone was expecting. But again, like we talked about last week, I suspect the worst is to come, and I think you're going to see another 10 to 15 points off a lot of those next year. Like I really do believe that because again, I think it's a sentiment drop. Like I think people like these prices have come down on sentiment and the idea of fear and scarcity, like people being afraid of like what's to come, but not because it's actually happened yet. But I think next year when we feel what's actually going to happen, yeah, we've priced in some of the drops, so it's not an overnight drop of 30%,
Yeah.
but it'll still be another drop of 10 to 15 points. It'll be more gradual. So this way, instead of your house going from 500 to 300 in a month, now your house went from 500 to 300 over 8 months.
That feels a little better.
Feels a little-
so
not so bad.
the worst is yet to come. Thanks, Neil, for chiming in. What's kind of curious, though, and this is sort of interesting. People have to remember it's so hard to go back in time. But remember August of 2021 and things were just cooking along.
It's really hard to go
Right.
back in time.
Go back in time in our imaginary mind space. So, do you remember August 2021? This time last year, things were cooking along.
Things were cooking.
Right, market was going well.
Yeah.
And it continued on that upward trend, like we said, at least until February, March, if not
Yeah.
even until April, May, depending on how you're measuring.
Yeah.
So there was a huge run up from August until that peak of May. And really, it was probably a run up to that absolute height, probably around 20% or so. Because
Yeah.
what's interesting is from August of 2021, the whole market is actually still up almost 9%. It's up 8.9%
Yeah.
from the last 12 months. So while the recent trend has been quite poor, homes are still worth 10% more than they were just last year in this current moment across this index.
It's literally like the charts. It's like the motion you do with your hand. It's like it gets going, starts picking up steam, starts picking up more steam. And near the end, it's just skyrocketing. Like those last couple of months, I was looking at a place that sold in March of last year. It was up for $350 and it sold for $485. And now the neighboring properties, which are identical, are both listed at like $365 and they can't sell. And
Oh,
like,
man.
this dude's
I
got to be
hear ya.
sitting there being like, I just paid $485 and now my neighbors are trying to sell the identical product for $365.
Yeah.
But that was right at the peak, and so prices and people were just like fatigued and like I
Full
need
psycho
a
mode.
house and I need to just go full in, and like so it just like shoots up straight, right? Like it's that exponential curve, and so like the first year of this growth that we saw in like 2019, you probably saw that same amount of growth, if not more, in the last 3 to 6 months. Like
Oh, yeah.
it was insane. Like it just started picking up the pace like crazy.
So, well, over the last 12 months, so from last August, as a country, we're up almost 9%. But year to date, we're only up about 6.5%. So that kind of shows that at some point here, we've started giving away a lot of those increases that we got.
Yeah.
Halifax, is still up 15% since last August.
Wow.
Victoria is still up about 15%.
Yeah.
Vancouver's still up 8%. Calgary's up 13.5%. Montreal up 12%. Toronto up almost 8%. So compared to last August,
Yeah.
things are still up quite a bit.
Yeah.
So people keep talking about, we're going to give it all back. We still have a pretty significant, we still have 9% just to bring us back even with last August.
Chandler's got no fear.
No, I'm just saying, like,
Take the rates to 14%.
twist it, turn the screws. Yeah, I mean, I'm just saying, you can look at this two ways. One, if you purchased a home last year in August, you are still significantly further ahead. Saying nothing for the fact that you probably got a better rate and blah, blah, blah. You are still significantly far ahead. In Halifax, you're still 15% ahead. The question now is, how much of that are we going to give back? Because we gained, there was a point probably where from August until the peak, like we're up 20%, and now it's trickling back and back.
Yeah.
So how much do we think we're going to give back? There is a pretty good cushion there to even hit us from a year ago. I would think, and you see some projections, that our actual year to date, like when we hit December 31st, our actual change is only going to be about 2% growth for all of 2022, which means that we'll have had this massive increase in the first 3 or 4 months of 20 or 23%, and we'll give it all back by the end of the year.
Yeah, I agree. Like I said, I think we're going to go down another 10, 15 points, potentially maybe more. I'm like back and forth to see what's coming. I think we're going to give it all back and a bit more. Like it only makes sense to give it all back and a bit more. But if you were like me and you listen to all the Chandler stuff and the only thing you got out of that the whole time was, why am I not investing in Alberta? I just want to talk about it a little bit because I've spent a lot of time out there. I have looked at investment properties out there. I'm still continuing to shop. It's a good market, but I think the difficulty is that their pricing stabilized many years ago when the original oil booms. And so I found in this, the number one city I would say in Alberta is Calgary. I'm sure there's people that are listening from other cities in Alberta. Nothing against those cities, but like it's
the Mecca, I guess, if you will. Yeah.
Yeah, exactly. So every rental property I looked at, plus minus, but maybe 20 grand, they all came in at 200,000 a door. I didn't come across stuff that was priced way under market. I didn't come across stuff that was priced way over market. It was just everything kind of sat at this baseline level of around 200 a door. And the rents aren't super high there because there's a fair bit of inventory and their population fluxes so much with oil and gas that like during the biggest booms, they've built so much that when things are slightly slower than that, there's enough inventory to suffice the demand. And so kind of rental rates are normal. And that's why if you look at a lot of stats, like Calgary doesn't peak at the highest rental rates, oddly enough, because they have some of the highest incomes and the lowest taxes. So people have more expendable income, but they actually don't have to spend it on housing there. So I was struggling in Calgary. One spot that seemed interesting, and it's a city that's growing and I think getting better and better by the day, is Edmonton. Edmonton had very affordable rental properties, multi-unit buildings, multi-unit homes, and even just townhouses and stuff. Like, there's something that reminded me so much of the townhouses in Spryfield here in Halifax, local to us, was they have condo townhomes that are 2-3 bedroom townhomes for $70,000 to $110,000, which we had just 2-3 years ago. Like we had them for 130 grand, 150 grand, 110. Yeah. They have these condo townhouse complexes. And so they have those in Edmonton. And I'm looking at those being like, if you can get in there and buy these little townhouses for 150 grand even a piece, you only need maybe $1,200-1,300 a month to rent them, which they're a single family home effectively. Eventually down the road, those are going to become worth a lot of money, I think.
Yeah, we had a few of those spike big time here.
But it's tough when it's a very transient population there. And I don't know that their immigration numbers are as high as other parts of the country on a percentage basis. So again, I'm just saying this for anyone who heard him say that and like, well, maybe I should be looking at Alberta as an investment place. Definitely should be, but I think it's more of a long-term investment. I think the Burrow model is a little bit harder there. I know we do have some listeners there that are buying houses and tearing them down and building townhouses on the strip.
Infills, yeah.
Infills. So I think that's more their market there is like the infills, new construction and resale, because the rent's not very high, so you can't appraise for a ton of money. But if you can build condos or townhomes you can sell, because of the strong incomes, people will pay for nice new product. They will pay a premium. So, anyways, it's a little bit of a digression, but I just heard you say it, and I feel like someone listening was probably like, I wonder if I should be in Alberta, not wherever I'm working at, and that's just what my experience was when I was out there.
Yeah, I'm going to throw something at you, and I want to see your opinion on it. So from pre-pandemic, I don't know, call it the start of 2020 till the end of December of 2021,
Mm-hmm.
we effectively grew like 29%.
Yep.
And now we're still about another 9% this year over last year, or maybe about 6.5. So it means in order to get to pre-pandemic levels, we would have to fall upwards of 35% from today's values, maybe even more.
Okay. So
Do you think?
yeah, I do.
Whoa.
2 things. So
No, not happening.
Yeah, it's happening.
No, it's not, dude. No.
So
That would be a crisis
let
of
me
unprecedented
explain
extreme.
myself.
You're wrong. Okay.
So
Cheapers.
2 things.
Okay.
Aren't we up more than 29% since the start of the pandemic to the end of 2021? Or is that what it came out to be?
It was about that.
Okay, so
30%.
30% over the 2 years. That's yeah, that sounds right, yeah.
over 22 months, basically.
Yeah.
And then it continued to go up into this year,
Those psycho 4 months that we had.
and then it's pulling back from there, right? So it's maybe 29 to 32% during the course of the pandemic, depending on your measure and whatever. And yeah.
So first item that I want to go over is, let's say the average was 100 grand and it went up by the 40%. It's 140K. If it drops 40%, that's actually dropping by 56,000. So it goes down to $84,000, not 100,000. So the percentage on the drop side are actually worth more because you're multiplying it by a larger value.
I understand how math works, yeah.
But
No, but you raise a really good point.
it plays into a factor.
But doesn't that make it less likely that it's going to give back the same percentage?
Well, I'm just saying like, when you see those drops that they have more weight, like just add like almost a 10 or 20% weight on those drops that you see relative to the old growth. But that's not like meaning anything. That's not what this is. Not just about stats. It's about what's actually going to happen. So I think that it's going to continue to go down, and I've said it a bunch of times. And the simple reason being is there is a bunch of money that went out there. A bunch of people got it and they spent it. It forced prices up. We now have this inflationary pricing that's not just going to come down overnight because it trickled through the whole line. It's not like we just had like a temporary bump in pricing. It was across the board and everything. And so everyone can agree with that. They're facing with everything that they're experiencing. If you look at when oil, even now, so now things are, say people are like, oh, we got under control with interest rates and this and that. Yeah, well, the biggest indicator that moved there was the gas price, which can kind of artificially be manipulated. And if you look at when oil was at this price per barrel last time, the price of gas was not at this price at the pump. So they're still gouging and they're going to continue to do so. Let me finish. Then you have your interest rates on everything that you've bought, any lines of credits that you have. All those items are now going to cost more. It's going to be more difficult to get them. But people who already have them, which most people already have, like that's why we had this crazy consumer spending, they're going to be stuck with those things and they have to pay those things off. And then the last item being is unemployment. As these big companies start seeing things dry up and they start incurring more cost of money and they start having issues to get product off the line, unemployment follows. Like it's a compounding effect. And I feel like the snowball has fallen off the side of the mountain and it's starting to roll down now. The drops that we've seen right now aren't actual. I don't think what we've seen right now is sentiment.
Here's
I think
one.
we're going to see the pre-approvals that people aren't going to be able to buy coming up. People are losing their jobs coming up. People actually not being able to spend the money because they don't have it anymore coming up. Like I think that's to come. And I think that's going to hit harder than the sentiment drop of 10%. I think it's going to be like a proper 25%.
So this is officially the doom and gloom episode. Don't forget to like, follow, subscribe. Here's why you're wrong. I agree that there is going to be more drop to come. I agree with that, and I think it just only makes sense intuitively. With the scenario you're describing, tell me, in that world,
yeah,
how do we build a single new home? I don't mean how do we build the homes we need, which is I don't know how many 20,000 homes, whatever. I mean, how do we build a single home and sell it if resale prices are down 30% or 40%, as you've been? How is that possible? How do we then justify single new build construction house?
Well, we don't, and
We don't. Okay, so inventory doesn't increase. And,
not much,
and
at a
people,
very much slower pace than we need.
okay, and assuming the majority of people have a small amount of equity in the property, the most susceptible people to this pullback and to this pinch that you're talking about have, let's be generous and call it 10% equity in their home when they buy. Now they have minus 30% equity. How are they going to sell?
This is okay. So here's the thing. A lot of people aren't going to sell. And
Okay,
I think
so now we
inventory
have-
is going to remain low.
So now we have no new construction. That's not inventory low. That's inventory. Like already we've
but
had.
I'm saying
we've
the
had
ones that
moderate
do
changes.
the ones that do have to sell, the houses that do sell will sell at a big discount.
We've had moderate changes in price valuations, and our inventory is down 20%, almost 20%. You're talking about a 40% reduction. There will effectively be
I'm
no
not 40%
homes for
across the board.
sale.
I think 25 total.
Okay, so there will be no homes for sale, no homes being built new, and we're still bringing people in. At some point, the home you're referring to that's going to come on the market, all right, there's going to be something like, listen, I can't pay the bills. I got to put it on the market. There's going to be such demand for that property, it is going to prop it back up. There's just no way. I don't.
But how's there
think
going to be so much demand when the rates are high? People don't have jobs. They're getting beat up all over the place. They're seeing layoffs taking place all over.
So there's going
like
to be there,
what are they going to do?
There's going to be no house for sale. And you're telling me there's going to be no one with jobs that when a house
I'm
comes
not
for
saying
sale,
no
people
one
might
with
buy
jobs,
it.
but it's the same thing. It's like I think there's going to be houses that are going to get built. I agree that it's not going to be as bad. I think the states are going to get beat to shit because they build so much inventory so quick, and I think that's our saving grace. And I say that all the time is that
And people
Canada
in the States
weathers
can move around really easily. Here, people do not move around nearly as easily as the States.
exactly, and I think we are much stronger in our housing market in the sense that basically by the fact that we have no inventory, it forces the value to remain. But I still believe that there's going to be people that have to sell that are going to cause it to go down. And I think just transactional volume is going to really dry up. I think that's what's going to take place. I think people are going to need places to live, and there's going to be a lot of people renting houses, a lot of people renting units. But I think it's a mindset where people, if they're seeing like shit, like I know a friend that's selling at a loss, or I know like everyone cuts off on the buying, even when it feels like a good deal. If you know that it's going to go, if you think it's going to go down, or in your head you've been watching it go down for the last 6 months, then you don't buy. It's similar to the people that were buying when it was going up. They're like, man, I saw the last 2 years of it going up. This price seems out of this world, but it just keeps going up, so I'm gonna buy.
I hear what you're saying.
It doesn't always make sense. Like it's just like it's a simple thing of like there's houses and properties that sell on market and they sit on MLS for 40 days and then they sell and people reflip them 6 months later and sell them for 200 grand more, or they buy a piece of land that like no one's paying attention to and you buy it for 100 grand and 2 months later it's worth $5 million and you're like, why did no one buy that? But the general sentiment in the market is a certain thing.
So what you're saying basically is that demand is shifting to the left, right? But supply is also going to contract big time. And that's going to equal out to that's going to be, you see that like a little pen? I can't do this backwards because they're
so
opposite way
just
to
for
me.
you guys listening, Chandler's using pens.
I
do
tried
a
to do
graph.
some pens. But I just feel like the scenario you're describing doesn't take into account the fact that there's going to be no supply because no one will be selling
You know what I think it's really
So-
dependent on? The immigration numbers at the end of the day.
Yeah.
Because if they cut off immigration, then I really think it's going to take a beating. If they
Yeah.
keep pumping people in here, then that logic works that it's going to keep getting worse because supply is not going to contract more because they're still going to keep building stuff slowly. So supply is going to continue to grow, but is it slower than the amount of people that are showing up here?
So what's going to be really interesting is what's going to happen is we're going to have a conservative federal government, most likely next. That's not me wishing something into existence. That's kind of what I genuinely believe to be true, which will hopefully maintain some lower pricing in the oil market here. That is my real wish, and I think there is going to be such a desperation for.
You buying a lot of oil? Neither here nor there.
No, but like I do feel like the oil is going to start flowing a little better here, and hopefully there's a bigger push towards transporting oil and refining oil here, et cetera, et cetera. So I think that's going to happen. But interestingly, the Conservatives tend to have a slower stance on migration. So we'll see how those things kind of counteract one another. Because the only way inflation is going to get at all under control is to somehow keep oil low.
Cut immigration. I can see it. The only they need to pump a shitload of oil into the system. They need to start getting way more production going on.
Drill, baby, drill.
And then come up with incentives to build a shitload of homes and apartments.
Yeah, the problem is like those incentives to build those homes and apartments are kind of like a way of printing money, and I don't know. That's inflationary pressure, man. So I agree. There's going to be more pullback. It's going to be significant. I don't think it's going to be as significant as you're talking about. Also, if we look at these markets, it speaks to the fact that every market is not the same, and we have this obsession about what's going on in Toronto and what's going on in Vancouver, and then you look within Toronto and the GTA, and you realize even that can be skewed one direction to another. So I personally feel pretty good about Halifax. That's again, that's the market we know best, but there's a lot of underlying reasons why I feel strongly about Halifax, starting with the fact that even this job loss, it rarely comes in the public sector, especially during economic downturns, because, politicians are trying to get reelected. They're not going to do these mass layoffs, and those are all collectively negotiated anyway, and all these things. So I feel good about our resiliency here in Halifax. And we're also more affordable compared to some other places in the country. But
Chandler's trying to keep his buyer clients.
that is a real that is a real thorough breakdown of these most recent numbers. There's a lot of moving parts here. We're still up year over year, but that gap is really, really shrinking. I think we're going to give back most of the gains from the last 12 months by the end of this December. And that'll vary region by region, because like I said, we in Halifax, we're still up quite a bit, from this time last year.
I want to preface everything that I said with...
It's only called prefacing
if you say it beforehand. Yeah,
so
it's true.
You're not
now, what am I doing? I'm
prefacing.
I don't know how to preface it. I know, my bad. What's the term?
What's the after preface? Oh my gosh, I should know this.
Like Mr.
It's
Smartass.
like an epilogue. I don't know.
The epilogue to what I just said is...
Is that even right?
I don't think so.
I'm many years removed from my literary studies, but yes.
Where was I? No. Okay, so is that I'm going to go full realtor mode here, but I think it's still an okay time to buy if the numbers make sense. Like, you never want to try and time the bottoms or the tops, right? And so, okay, so there's a bit of a discount I see here. There's a reduction in volume taking place. If you can make the numbers work on a property purchase right now, my logic is, okay, this place might have been going for 400. You might be able to get it for 350, 335. Let's say 350. You can get into it. You take the shitty rate for 2 years.
Yep.
The cost of that shitty rate is going to be like $15K in interest, extra interest, right? Like so then you're looking at 365 for a house that someone paid $400,000 for 6-8 months ago. You're still ahead. Now it may go down another 10 or 15%, but you can't time that bottom. It may also not, like to what Chandler just said, it may not go more down.
Also, what is your alternative? You're going to sit in this apartment. Rental rates are finally starting to level off, and in the States they're even pulling back just a tiny bit. But man, rental rates are up huge. So what's the alternative? Like, you sit in that apartment longer, you pay those rents, and you have maybe less satisfaction. Like, buying a home is a very emotional thing. So there's tons of reasons people would still want to buy.
Now, if you can't afford your current setup, don't be buying, because that's not a good idea to try and buy hoping that eventually it's going to come back around. But I just don't. I'm not big on like trying to time the tops and the bottoms, and I think there's a discount right now. I do again expect more to come. So I'm personally shopping though at the same time. Like, if a good deal comes, and just run your numbers at higher rates. Make sure you're stress testing yourself. Don't just let the bank do it. You got to be diligent yourself and do that. So, anyways, not to lecture, but I don't think it's like the be all end all. Again, I think a lot of people listening are kind of debating what they should be doing with their investments or their purchases.
Yeah, we're gonna pivot here, but thanks for listening to this point. Don't forget to like and comment. Let us know, what do you think it's gonna go down? Do you predict a soft landing, or you think the shoe's going to drop the way Neal sees it? Comment below. That's worth an entry into the draw for $100 and a free month to Patreon. So too is a like, so don't forget to like it. If you're listening on Spotify, Apple iTunes, pop over. It takes 2 seconds. It really supports us, and maybe you'll win great access to the Patreon, all that. I want to pivot just a little bit to some fun news.
Okay.
On a lighter note. I love hearing these landlord stories, and this tenant, I think she published it. I don't know if she published it on Reddit or TikTok or something. I can't recall. But after she signed the lease...
Can you use the word publishing on TikTok?
I think it's
Is it
published. It's whatever.
Okay.
Posted.
Okay.
So it is... This guy's going to get me on my grammar now. My language usage. So... After she signed the lease, the landlord gave her this list of 14 rules of the house. And some of them are to be expected, not too unreasonable. But one that stood out was that her boyfriend was not allowed to stay past 10 p.m. and no premarital sex was allowed to be had in the house.
That's amazing. Dude, where do you find... What landlord group are you on? Like, what was it? A couple weeks ago, you were talking about the guy who gets, like, BJ's as part of his monthly payment. And now...
There's a sketchy website where, like, sketchy landlords meet up with tenants. It's called Creepers and Seekers. No, I'm just kidding.
Chandler's the head of the council. He's like, thanks, everybody, for coming in today. I'd like to see all of your addendums for your leases, please.
What do we got? Kevin down in Las Vegas. I know you did.
This is definitely
you dirty bastard. You're up to something.
It's definitely an old dude who's got like a crush on a young tenant.
No,
And-
they said it had something to do with their religious beliefs, and they were saying if you want to live under this house, you're gonna live by our rules.
Okay, now
And
that makes a
was
little more sense.
no premarital sex.
Interesting.
Yeah,
How's he policing
so
that?
that's one time where a tenant breaks the lease, and you're like, respect. Yeah. I violated the terms of my lease twice last night. Woo! Okay, so that's one little piece of news. There was another really cool story, and you'll appreciate this. Neal's a boat owner, as you might expect. The CRA took these people to task
Ugh.
because they didn't agree with the expense that they had run their boat through, right? So they own a marina, and they purchased this boat
Yeah.
for promotional use for the marina. They'd cruise around, it promotes the marina, they interact with the community, etc. And they actually charged themselves $16,000 to use the boat because, like, well, if we're using it sometimes for our enjoyment, blah blah blah. And CRA effectively audited them and said, no, we don't agree with this, blah blah. They appealed it, and the judge slapped CRA down.
Hells yeah.
It was
Hells
amazing.
yeah.
The judge said that basically it was not the CRA's business to pass judgment on how a operation, how a business decides to market. And whether or not the marketing is also enjoyable to them is irrelevant. Whether or not the marketing even works or is productive is irrelevant. That is not the CRA's business to tell people how to run their business. So the judge found that the $16,000 that they were paying effectively to use the boat for the personal enjoyment was really, once they audited the actual usage,
Not that
was way
much.
too high. Yeah, so score one for the boat-loving, tax-evading
Nice.
folks out there.
It's not tax evading.
No, it was deemed not to be tax evading.
It's smart tax policy.
But if you run a marina, I think you should be able to claim 100% of a boat.
But I always feel
It's all deckled up. They're out there going to events.
I find myself in this situation all the time with a lot of the things that I have and do because honestly, a lot of it's part of my business. Like it's the appearance that I upkeep. It's the people that I spend time with.
100%. And that's what's so huge about this.
These trips that I go on a lot. Like I realize now that a lot of the trips I've been on, I'm like, it was with clients. And yeah, they're my friends and stuff like that, but they've become friends or they've become clients. Like it's weird, but the CRA does this as I think of like fear mechanism to try and chase down all sorts of people and on small things like $16,000. What are they doing going to court over a $16,000 claim, which means the tax write-off is probably like a few $1,000s. Like,
Yeah.
what a waste of time.
Well, people hear boat and like, oh, this something. It's like, man, they run a marina.
Yeah,
Right?
this is I don't know, but I'm glad they won. Like, screw that. Like that would be insane for CRA to pull that stunt. I forget what I was claiming the other day, and they were saying, oh, well, CRA can come after you, and you have to prove the whole situation. And I'm like, you know what? Honestly, I think I probably would because it's legitimate that I went on a specific trip to do something that was a benefit to a client and ultimately a benefit to my business.
I had two that I was always wary of. I rented the rink every Christmas just to, play hockey with my boys.
Yeah.
Right? But man, I sold most of those guys' houses.
Yeah.
And so we go there, we catch up, we shoot the shit, and that is the definition of your sphere of influence. And sales 101, man, work your sphere of influence. Be in their ear, be in contact with them as regular as possible.
Yeah.
So that should be a business expense.
Yeah.
And if CRA says, well, not very effective, and you didn't even really put up much signage and you barely talk about real estate, kind of none of your damn business is what this judge said.
How you run your business. There's a reason that people called you because you probably didn't have a sign on their face.
And the fact that I enjoy playing hockey and we have a good time, that is also irrelevant.
Yeah.
Like, say my marketing campaign was standing out on the sidewalk spinning a big sign. Like, if I really enjoyed that,
sometimes.
that's irrelevant to the whole thing. It's still marketing. The other one was, man, sometimes you have like a big party and you spend hundreds and hundreds of dollars on the party. Like,
That's
you get
me.
a couple kegs, you do this, you do that, and then it's that's something that you can never claim. But man, if I look around the house, if I didn't sell you a house, or wait, if you bought a house through someone else, I don't even know how you got invited. You're probably a plus one, or one of my wife's friends. But those are my people in that room. And I've never expensed one of those parties, but people ask like, oh man, do you do this? Do you put up banners here? Do you do that? I'm like, I don't do any of that crap. Like, well, what do you do for marketing? I'm like, I don't really know. Like, I do word of mouth, but no, that is what I do.
Yeah. No, I had that same moment where I do it through a lot of different things that are alternative. And I caught myself being like, man, the only reason I'm doing this is because there's a business aspect to it. I don't know why I'm feeling bad because I'm feeling bad because I feel like I had pleasure from it. So I
That's
don't.
what they said. It's
yeah.
irrelevant.
Yeah, I agree. I'm gonna
You
start
get
claiming
pleasure
everything.
from your marketing. Why not?
I'm claiming everything.
Yeah, claim it all, baby. Last item, and then we're going to switch into some stuff more personal to you. We haven't talked about this in a little while. We talked about the Great Resignation and what that was, and people just
Yep.
kind of walking away because the job market was so strong.
Yep.
And then there's this other thing called
Turned around quick.
what's that?
That turned around quick.
What did I turn? What do you mean?
The Great Resignation, and now it's like unemployment's going up.
Yeah. The involuntary resignation.
People are like, oh,
But
shit,
there
I
is
need this job
still
back.
there is still this movement, and there's all these different terms floating around there. And let me know if you've heard any of these: quiet quitting, or
Yeah, I
the
think I've
soft life, or my
heard that.
favorite, lying flat.
What?
Have you heard about these?
Planking?
Planking's back, baby. It's 2022. Planking's back. How has planking not made a resurgence on TikTok? I don't know. Someone go out there, plank, put it on TikTok, tag us.
That's a bad idea. Don't listen.
So
to him.
quiet quitting it was basically this idea of people kind of mailing it in, which I know a lot of you out there is like, I already do that. But working just the minimum, no overtime, no extra effort, doing the bare minimum, and not kind of falling into this obsession of like, I need to work ahead, I need to grind, I need to climb my way to the
Isn't that just work from home?
I think that's just work for the public sector. Boom!
Oh,
Like, follow, subscribe.
More like we just got the 30 we had subscribers, and now have 10.
So quiet quitting, that's movement number one, where people are basically work to rule, was sometimes what it's called when you're in a labor dispute. You'd work to rule.
Yeah.
Soft life is kind of goes hand in hand with that. Neil lives that soft life.
I live the soft life.
Which I think is basically same deal, just slacking. Lying flat. So lying flat was a literal translation of a Chinese term that I can't pronounce, but it is a movement whereby people work the bare minimum jobs. They live at home with their parents, and the lying flat speaks to the fact that they just kind of lay around on the couch, and it is a form of silent protest against capitalism, corporate America, greed, climbing, and blah blah blah. Is it that, Neil? Or is it just laziness?
I'm just blown away. I guess if you're living the soft life, you have time to come up with all these terms. Because I didn't realize
my God.
that there was so many names for it. But lying flat sounds like some people that I know.
What are you doing? Lying flat.
I'm just lying flat. I've never heard anyone say that.
I lie flat around 8:30 or 9 at night. Once the kids are in bed and I'm done freaking working, I melt into that couch and I watch TV,
Just
but I
blast off
don't do it
emails.
at 11 a.m. on a Wednesday.
That sounds amazing.
So this is the movement sweeping the nation or the world.
Yeah, I feel like that's. I feel like that's. I don't know if that's a movement. I feel like that's always been the case. You're gonna have a bunch of people that are doing the bare minimum for a multitude of reasons. It's not necessarily that that's what they want to do, but I feel like they're uninspired by the job that they have. They don't feel like they're getting paid sufficiently for what they're doing, and a bunch of other reasons. Or feel like they have issues with their colleagues. But I don't know. It's that's just the world, man. I feel like as I've started to grow a business now where I have people working for me, I'm starting to see how difficult it can be to inspire people and keep them motivated to keep going. So I feel like my generation has this really high expectation of what they should be doing and what they should be getting paid and how they should be inspired on a day-to-day basis. And I think that really impacts this and why you're seeing a lot of people lie flat.
Yeah, and I think there's a difference here because there have been people laying flat for a long time. I think now it's viewed as some sort of moral protest, and I don't know if I'm buying it. I don't think there's anything wrong with working hard. I think the implication of this is that other people are maybe foolish or dumb to want those things, which I just flat don't agree with. But anyway, I thought you'd get a kick out of that because
That
we're
is quite
probably
funny.
the antithesis to that. So on that note, we're going to
Soft
pivot.
life.
We're going to dive into what makes Neil tick.
Oh no.
What gets him? What takes him from line flat to full on erect?
Oh no. You can't. No way.
We might have to bleep that out. Maybe not. Leave it in. I don't know how
Just-
YouTube works.
Just beep out the
What
word.
can you say? What can you not say? So, first of all, Neil,
Soft
What's
life
new?
to the hard
What's
life.
new with you?
So nothing crazy new. So I've been shopping a little bit, but I'm trying to make a transition from buying old product to building new, potentially getting into commercial. I feel like I'm a bit weathered, beat up, and tired from buying residential product, and it's not something that I take pride in doing. In some sense, that like I do take pride in making the buildings better because they're dilapidated, but it doesn't feel good to have to displace someone to move somebody else in. Whereas I'm really excited to build new and
Yeah.
actually turn. Okay, this was a single family house. Now it's 40 units. So
Yeah.
this went one family to 40 families.
So you're shopping, but you're not necessarily shopping for the stuff you've shopped for in the past.
Exactly.
You're looking at land again.
Yeah,
commercial,
land again
industrial.
and commercial deals. But again, I'm beat up because I'm not getting nearly as much cash as I had projected. Which is
on your refinances. And things and stuff,
exactly.
yeah.
There are such low ratios that I'm getting out. It's really impacting my ability to my ability to kind of buy. So I'm being a lot more selective on what I do.
Yeah.
And I'm still in the sentiment of like I'm a little beat up from Atlantic Canada, and I'm a little beat up by Canada in general. So I still am exploring alternative markets. And I think again, like we've talked about, the alternative markets are going to take a bigger beating during these next 12 to 18 months, and I'm hoping it presents an opportunity for me to buy big and grow a lot faster.
Yeah, there've been a couple people I know in our network who've been looking increasingly more at the States based on their feeds, Manny and Janelle, and I think a few other people who are looking in the States. So shout out to those guys. Maybe we'll check in with them at another date. So now I'm going to fire some questions at you,
Okay.
just to kind of get your temperature on a few things and let the listeners know more about our buddy Sunil here.
Yeah.
So where do you feel, knowing what you know, like we're talking this context, the way forward to build wealth, do you feel like, well, which option do you think is better? Business ownership and development
Yep.
or real estate ownership and development?
Okay. Good question. My answer is not going to be direct, which kind of sucks, but it really depends on what you're doing and what type of person you are. Even that being said, real estate is number one. I think real estate number one for both parties. And what I mean by the different type of person you are, what your direction is, if you're working a job that is a 9 to 5, Monday to Friday, it's very difficult to add a second business on that can be fruitful for any real dollar value that's going to impact your life. You might be able to add a few $1,000s a month to your baseline, but you're not going to get to a point where it's going to change everything. Whereas real estate can be an opportunity for you to buy something, you have an income that you can use to hopefully approve it, and then it'll pay in the long run. Same with if you're doing a business. Like if you go full time in a business, realistically, one of the best ways to make money in a business is to buy real estate because the cash flow is great, but at the end of the day, the real estate is what pays off.
And you can control your destiny. If you own your real estate, you control your future.
Yeah, I'm a bit biased. Now that being said, real estate is very intensive and active. So maybe doing that through REITs or alternative investments or lending the money to somebody who is an active investor that can handle all of it. So you're getting that active return, but you're not actively involved as that kind of partner. You're just a silent partner. Those are ways that I would suggest doing it if you're not interested in buying the actual real estate and dealing with the tenants and being on the ground.
So that kind of leads to my next question, which I assume I know the answer then. So if you knew then what you know now, including rent control and the current climate and what's going on with the rates, would you still have gone into real estate, or do you think you would have done something different?
Like you mean like right from the start?
Yeah.
So part of me wants to say I would have done something different, and it's not because of what I know now about this market, though. It's, I think, my general experience and some personal disappointment in what I've done. I was always somebody that wanted to start businesses. That's what excited me. I wanted to create something new and grow something. And so I'm not getting to do that with real estate. It's the same. I'm doing the same systems everybody else does. There's little efficiencies you can add in here and there, and there's creativity that allows you to grow faster, but it's not, I think, sparking me the way that I was hoping it would. It's achieved me a lifestyle and a wealth base and an income base that's amazing, and I have no regrets. But I've now realized after meeting with other people in, like, let's say startup spaces or in the business world, I am now 27, so I feel like I'm 10 years behind in those worlds. So the guys that I'm up against in those worlds are experts in their field, and it's very difficult for me to now jump in. And so I kind of have to be like, well, I've pigeonholed myself in real estate, so I'm going to keep going that way.
I don't think that's the case, man. You're never too old to learn new tricks, but
Totally,
yeah, it's
but
natural to feel that way to some degree.
it's, for me, it's more the growth. So it's like I understand real estate fairly well, and I'm able to keep growing it, and I can do well, whether it's like fundraising capital, buying and understanding and continuing to move. And I have a big network in this world. And so I can then kind of without as much effort, continue to grow that at a certain pace. For me to then step out and start completely fresh in a brand new space right now,
Yeah, it's daunting.
it's daunting, and it's going to be a lot of work, and it's going to really, I feel like I'm going to be starting fresh, and it's going to take a lot of years to get up to there. So that's the one thing why I would change it, but it's nothing to do with the real estate or the rules that are in now. With all that, I am super happy for the real estate. I'm glad I did it. And I think what I'm going to do now is I'm going to start some businesses that are alternative, that are still within the real estate space. So I get to use
Right.
what I've learned to help me and be that advantage. And then the new startup world, hopefully I can find some partners that are knowledgeable that can be that way.
Gotcha. This kind of goes back to what we were talking about in an earlier segment. Do you think society penalizes ambition these days?
Totally. Yeah. We've talked about that before. I think society, I find this is a Canada thing, I think, more than elsewhere. Like, I think in the States, they're big on the American dream, and I feel like they kind of cheer on that growth that people have. But I find here, the ambition gets destroyed because you get made out to feel bad for either wanting expensive things or doing really well. Like, everyone loves when you start your business and it's small and you're servicing the clientele and everything's going great. But then, like, oh, you added 4 more locations and you now have a big house in this. Then they're not so keen on you anymore, I find. And it's kind of with all that stuff. And I don't love that's the case. And I understand that, like, if you're being flaunty with the money and all that, it's not a great way to be. But a lot of those people worked really hard to get what they have. So it's like, well, and I'm not even speaking to myself, because, like, a lot of my stuff isn't that crazy, but I just mean, like, I'm watching it take place, and on average, most people don't speak super highly of people that are in the growth
Oh,
mechanism.
100%.
Most times it's the ones that are at the top that are now starting to do some charity work that get a bit of pleasing. But I think in
Yeah, this
general,
is
the
a-
sentiment's not great.
This was a leading question because you know how I feel about this, and like I've always asked the questions like, so how many units is it that you become like the worst person ever? Is it 1 unit that you own, like, or is it the 3rd unit, or is it the 10th unit? Like, when do we become like the worst person ever? What kind of money? How much money do you make when you then become evil? But do you ever feel personally like you're slacking or maybe getting comfortable because you have accomplished so much in a relatively short period of time?
Totally. I am unbelievably unhappy with myself in my current standing, because I was in a mode for many years to get started. Sorry, excuse me. But from probably like 18 to 25, those 7 years, I had nothing but blinders on, just to work, grow. And the last 2 years, like, I had a bit of success and I let off the brakes. And so I'm a little frustrated with myself in the fact that I feel like I've reduced my continual improvement. Like, I stopped reading as much, I stopped researching as much, I stopped networking as much, and that is something that I can feel it in myself. Like, I'm not growing at the same pace, I'm not as quick as I was. So I now feel like I have become complacent, but I chose to do that because I reached a certain level and I didn't want to leave my 20s having felt like I just grinded it
Yeah.
out. So
Yeah.
maybe I'm not super unhappy because I chose to do it last year. I guess the part that is blowing my mind is I didn't realize, taking my foot off the gas for a year, how much damage that would do to my growth. It's like literally restarting. Like, I feel like I'm having to,
Really?
like, pick. It's like okay, so let's say we're going.
So what do you do then to get you back revved up?
You got it to get me back revved up. Like, it's just like I know what I can be and I know what I want to do, and so I end up setting these goals again that I want really high. I have to reset my targets, refocus in on them, be like, these are the goals I want, these are the timelines I'm going to do it in. And you also just need to start making active choices. So it's like, again, I just start eating better, basically cutting out as much drinking and going out, and like socializing. Unfortunately, this is something that I didn't socialize much before, and I realized social life is amazing, but on the flip side, it takes a ton of time and effort to
Yeah.
maintain a social life, and so it's a hard one. So now I'm having to peel back the socializing, and that's probably one of the hardest ones, because your friends are like,
Where are you at, bro?
"Where are you at? What are you
Yeah.
doing? Like, why have you changed?" And it's like, "Well, I'm trying to get back to where I was." Right?
This is sort of in line with like the demonization of success and ambition. I used to have guys like, "Oh man, like where you at, bro? All you do is work, and you got to have a balanced life." And people with success know a balanced life is not a way to make progress. Right? The people who are
Yeah.
good at something is because they obsess over it. Like the person who, is the fastest person in the world is not because they're not running every day, right? Like you have to
Yeah.
train to do these things, and it takes time, it takes sacrifice. Do you ever think you'll buy a 6 to 12 unit building ever again?
Totally. I mean, if the price is right, I'll still buy them. Potentially, if the land underneath has another option, but I'm still interested in buying them. I'm not going to be as aggressive in my plays to try and turn them over and stuff like that. There'll be more just investment plays as time goes on, but it's not something that I'm as keen on. Just again because I don't love that way of that part of the business. I'd rather be in development and adding units and helping to build communities. But yeah, if the right deal comes, if you got something for me, hit me up because I would love to look at it.
If you didn't have to pay any bills for 12 months and you could go full crazy mode into something right now, what would you go into?
So you mean basically take all that money and put it in something else?
No, just that you had no expenses to worry about. You didn't have to worry about paying your bills week to week. You could just full on go into something. What would it be?
So, I mean, obviously that would mean I wouldn't have to work as a realtor, which would cut a lot of my time. I already have cut that down a lot. But I feel like I would get really aggressive into fundraising capital to acquire and make a ton of acquisitions on the real estate side of things. I have another business that I don't really want to announce on here that I'm working on in the background. But it's basically, like I said, it's startups in the real estate space that can hopefully change the market in some way. I'm not necessarily looking to take over the world with it, but I want to have an impact in some format, maybe on the East Coast of Canada or somewhere in the States. So and I'm already trying to do that. And I'm trying to, this was to what you said. So now we're going to get into a little breakdown here. So I did this thing with the real estate and to the invest. The idea was that now I have a base and the monthly income from this eliminates all of my bills. And so I don't have to work a ton to pay my bills. I probably have to work maybe 10 or 20 hours a week to pay my bills.
To do something else.
And it frees me up to do something else. And so that's kind of what your question is. So it would take even that 10, 20 hours away. I would just go more aggressively on the fundraising capital to do acquisitions, as well as push on my real estate business. I will just say, like as a hint, it's in the construction sector because I think things need to change there. But I've tried some different softwares here and there, but I find it's a very clouded space. There's a ton of people already doing it, and it's hard to kind of gain traction. But that's what it is. I would get in the startup space. I want to be creating stuff, whether it be new properties, new buildings, but I really want to be creating something that's different. And for me, I think the merit will come once I've created something that someone like it's got value and it's something unique that they have to use it for. Like that's where I want to have some strength in the fact that it's something I've created that's got value that can't just be easily replaced.
Also, that's flowing with the values of the political and social climate of the time. And you've mentioned this to me before.
Yep.
Like you're either flowing with government regulation or you're swimming against the stream of government regulation. And let's be honest, as landlords, we're swimming against the stream a little bit right now when it comes to legislation and just public sentiment. So if you can get on board with something and be profiteering in a way that the wind is, filling your sails rather than, blowing in your face.
That's 100% it. I want to be involved in something that I think it'll benefit people. Like I'm not just doing it for a profit. Like there's a certain lifestyle I want to achieve. There's certain targets I have in my head. There's dollar values I want to get to. There's things I want to own. But they're not like, that's not my be all end all. There's also like an impact that I want to make on my community around me and other communities around the world that I hope I can achieve sometime, whether it be through a charitable effort or through a really interesting business or startup that I can get involved in. Right
on. So there you go. I'd love to hear your thoughts on what Neal had to say. That comment will get you an entry into the draw, as well as liking this video. If you want to go a step further, man, share it. If you can kind of spread the word, we're trying to grow this conversation and these ideas in this community together. We are working on the website. Some of you asked about that. That'll be linked to the Patreon, and there's going to be a forum, so you'll kind of have access to the entire space once you're in there. We are getting close to that. But thanks again, as always, for listening and checking it out. We really do appreciate it. And we'll chat with you guys again here soon.
Thanks, guys.
Thanks so much for watching the episode. I hope you enjoyed it. If you did, press like. Don't forget to subscribe. But also check us out on Instagram and TikTok. You can find all the links below. Thanks again for checking us out.
When I was broke, I had rich habits. When I was broke, I had rich habits.